ATKR, and they engage in the manufacture and sale of electrical, mechanical, safety, and infrastructure products in the United States and internationally. They offer metal, electrical conduit, fittings, plastic pipe conduit, electric cable. So these guys probably do well if there's things being constructed, if there's a lot of demand on their product. They've seen a really hard pullback in their stock. Man, 48% downturn in their stock. Now, they had been on a really nice rise. Man, look at that beautiful rise. But more recently, they pulled back to the stock price that they were selling at in 2021. This is a small cap stock. It's $2.8 billion in market cap. Revenue is above that, $3.2 billion. PE is really low, 9.7. Incredible. Dividend is 1.5. Analysts think it's discounted. Okay, so take a look at their revenue. What's going on? So the revenue has been dropping. Okay. Wow, it's consistently been dropping for 8 to 10 quarters. Now, they were booming in 21, 22. Huh. I'm curious to understand what are like their principal markets, right? Are they like building out big infrastructure? Are they doing... So these are the products they have. Here are the markets they serve. So probably some of the enthusiasm behind the product is they do have a data center telecom segment. And of course, anything that says AI data center has been receiving a lot of investment. So that might be part of what's been really exciting for investors. Solar, and I think solar continues to grow. You know, so in California, we use quite a bit of solar, and I have solar on our home, and businesses have solar. I think it's a good idea. Well, I went to Arizona. Arizona is a desert, and there's a lot of sun. There was a lot of solar where I went. I'm glad because I think it's a good idea, and there was solar everywhere. So that's not a bad segment. Commercial and industrial. Now, commercial as it relates to office space is probably doing poorly, but industrial like warehousing is probably doing well. And utilities, you'd think they're doing well because utilities are supposed to be building out at a very aggressive pace. Okay, so those are the markets that these guys depend on. This is a concern where, okay, the revenue is down quarterly. Okay, quarterly they're down. At a certain point, they're going to make the turn, right? They're going to be like, okay, we're going to start growing again. This past quarter, they were down 9.38%. Again, it's been a consistent drop in revenue, right? So the stock dropping is rational. Like, okay, if revenue is coming down, that means fewer projects, fewer products are being sold. Maybe because this is a product that once you lay down, you know, particular electrical, you don't have to touch it for decades, right? Like the electrical in this house, this home was built in 1960. So we're at 2025. So over the course of 65 years, the electric wire that's in these walls, other than the stuff that I've added, like they didn't have, like I have networking cables in here. I added 500 square feet. That stuff's newer, but everything else has been here. So this stuff doesn't have to be replaced all that often. So they are going to be dependent on growth of data centers, growth of housing, and growth of industrial. And it looks like they've been hitting a really good downturn. Higher interest rates might be affecting the amount of construction that's happening. So that one there is a concern. They announce, I think you mentioned that they're going to be announcing on the 4th, which is Tuesday. And I think if they show growth, this stock's probably going to move. And if they show growth and guide and say, hey, we're going to start growing now. We've had, kind of, a solid period of time where we were not growing, and here are the reasons for it. They did grow substantially here, right? So maybe everybody bought what they needed in 2021, 2022, and then there was a lack of demand. So that earnings call will either keep the stock price where it's at, or maybe even drop a little lower. If they're like, yeah, we're still not growing, we're not quite sure where we're going to grow, stock price is going to keep dropping. But if they're like, hey, we are making the turn, we are optimistic about 2025, here are the reasons for it, stock may rally a little bit, and it might give an investor enough to want to start a position in it. I have no idea what they're going to announce. And if somebody else knew, obviously that's information that would be very valuable. On cash flow. So with the lack of revenue, it really affected cash flow. You could see that cash flow really followed that top line revenue. It really grew in 21, 22, and then it dropped. So that is all rational. This is all like logical, rational. Profit margin of 14.5, and that's net profit margin, not gross. 33% gross. And you see how their profit margins have dropped with the lack of volume. It looks like they had pricing power in 21, 22. Now they're having to discount their product quite a bit. So they are feeling it. This business is feeling the tension of just not enough demand. This is a wait and see stock for me. Like, I need to hear this earnings. I need to understand what comes out. Have they made the turn? Are they continue to see this really bad recession within their industry take place? What are the things that are going to make the stock work? And now their dividend is quite low, and it might be because their stock price did double over the last 5 years. That could be part of it. This is an industrial, right?
No, the dividend, they just initiated the dividend like 2 quarters ago, so it's quite new.
Okay.
But they are doing impressive buyback. If you look at the share count.
Okay. That's smart. It's smart on their part. Okay, analyst. So for 2025, which this fiscal year will end September 30th, 2025, analysts are still expecting the company is going to continue to contract. And okay, now this is what analysts are predicting. It's not what the company's saying. So if this changed to green, the stock can begin to work. You can see their profitability is dropping as well, 32%. So these numbers look, so the stock price dropping 48%, it's all logical. It's like, okay, their fundamentals have dropped. The company isn't selling as much. They're not making as much profit. Their prices are going down. The stock should be dropping. There's no irrational element there. The PE being down, yeah, it's down because you're dropping revenue. A business that's losing revenue, this is a sign that their product isn't in demand. Maybe their product isn't as competitive as it should be. Maybe there's a competitor out there that's selling the same product for a lower price, a better product for a better price. All those things could be in the picture. Once they start growing, and they're not supposed to grow all that great. So this one here is, I think it's a complete pass for me. There's just the investment of time, energy, focus, I don't think is going to be rewarded. I think these guys had a great run, and now the stock price has really fallen. But I'm not seeing the stock price being in recovery mode soon. Let me double check one more factor. So their free cash flow is dropping, right? So it's 400. So 400. Yeah, I mean, you could say they're discounted if their balance sheet's really healthy. So balance sheet, they have a okay debt, not too bad. It's 600 million in net debt. Yeah, I think they're fairly priced. Maybe, yeah, they're fairly priced, maybe a little bit discounted, but not worth the risk for me. It's like this stock can continue to drop. I think it's not, they don't have an exciting future ahead of them. It's not like, hey, we're going to start growing at 20% in a year from now because we got this new product that's coming out. It's going to be awesome. No, it's like, oh, when things recover, we're going to be growing at 4 or 2%. It's like, okay, that's not exciting. Even at that growth rate, I value them at like 4 billion, and that would be about a 30% discount if they started growing. And that's the if, right? They have to announce and tell us what's going on. So that's ATKR.